everyone, summer is flying by. Before you know it, students will be heading back to school and fall will be right around the corner and traffic will come back. Even with vacations and the Texas heat, which we really haven't had a lot of this year, the real estate market has remained active through June. Let's take a look at the latest numbers. I'm Missy Stegers, broker owner of MStagersRealtyPartners, and thanks for joining me. Each month, I share a quick update to help you stay informed about what's happening in the local real estate market. And later, I'll be joined by my trusted lending partner, Jen Bailey, who will share with you what's happening in the mortgage financing. So let's get started. San Antonio's market update. Here are a few highlights for you from June 2026. 3,479 homes were sold, up 15% compared to June last year, but still down. Median home prices, $329,730, up 4% year over year, which is really interesting because the stats aren't equaling what I see in the market. Average sales price is $401,319, up 5%. Average days on market are 77 days and homes sold for an average of 93.8 from original list price to sold price. There's 6.13 months of housing supply. Active listings are 17,409 at an all-time high. That's more than what we've seen in a long time. And then let me tell you about the rest of the market. What I'm seeing right now is there are a lot of homes sitting on the market. That's why we have so many listings. I'm also seeing in the news them talking about appreciation, all of those things. But then when you start to read below the headlines, the story is something different. One, it is an amazing buyer's market right now. If you were ever thinking about buying, now is the time. It won't be like this forever. So it is a great time because price adjustments have happened, regardless of what the stats are telling you. In addition to that, if you're selling right now, pricing it for the market, pricing it because I don't want to stay on the market for a year because some homes are, again, they've been on the market for that long or longer. And also winning that beauty contest because there's not a single buyer out there right now that wants to reinvest more repairs in a house when they're purchasing it. Money's not cheap, so that affects it. Again, I'll go back to, let's talk about interest rates, which Jen is going to talk to you about as well. They're hanging out in the sixes again. We don't see them going down for the rest of the year. And we often say, don't date the rate. Hopefully sometime next year, the government will come up with something to help us in the housing market, free up some of this problem where nobody wants to move because they're stuck in low interest rates. I will tell you, if you're looking to buy, we have ability to tap into all the assumable loans that are available out there. So another reason why it's a great time to buy. Now, let's cover the Texas market update. Here's a quick look at what's happening across the state. 32,873 homes sold, up 7.7% from June 2025. Average home price, $456,196, up 2.2%. And the median home price, just slightly at $348,500. Bexar County median price is $310,545, continuing to be one of the most affordable major metropolitan areas in Texas. What does this mean? We are in a balanced market, means give and take on both sides. For buyers, there's a lot of increased inventory and a great opportunity to negotiate your closing costs and other things. We've already talked a little bit about what you need to do as a seller. The other thing that I would like to tell you is we are considered in a balanced market, but nationally we are number 5 in what's called considered a buyer's market. So again, thinking about buying, it is a wonderful time. Now I'd like to introduce my lending partner, Jen Bailey, who has the latest update on the mortgage rates and financing options. Jen, take it away.
And Nayeli with the Unity Group of Legacy Mutual Mortgage, and let's talk about June and what the market did in terms of mortgage interest rates. So if you watched mortgage rates in June, you probably felt like you were riding a roller coaster. We had geopolitical headlines, inflation reports, a Federal Reserve meeting, and rates moved pretty much daily. So here's what actually happened and what to expect going forward. So in June, rates remained very volatile. They spent most of their time in the mid 6% range, reacting to economic reports and world events rather than moving in one direction. One day they would improve, then the next day they would get worse, and it was kind of all over the place. As you can see on the chart behind me, that is a very volatile mortgage rate market. The Fed did hold rates steady. They did not cut rates in June. They continue taking like a wait and see approach while they're monitoring inflation and employment data. Inflation did improve later in the month, though. Towards the end of June, inflation data came in better than expected. That did help the bond market a bit and allowed mortgage rates to improve from where they had started earlier in the month of June. And many buyers are asking, well, if inflation improved, why didn't mortgage rates go much lower, right? So the biggest thing to keep in mind is rates follow a lot of different factors. They don't follow the Fed directly. They follow the bond market, especially the 10-year Treasury and mortgage-backed securities. Investors are still watching inflation, jobs data, government spending, and overseas conflicts. So uncertainty has kept rates elevated. Looking ahead, here's what I'm keeping my eye on. Inflation continues to trend in the right direction. The labor market is beginning to soften slightly. And if both trends continue, there's a reasonable path toward lower mortgage rates later this year, but it's unlikely to be a straight line, and there's likely to continue to be volatility this year. What does this mean for buyers? Well, instead of waiting for rates to hit some magic number, focus on finding the right house, try to get a good deal, buy when you're financially ready, and remember you can refinance later when rates improve. You can't go back and buy today's home at yesterday's price. So I'd focus on finding that right home, try to get a good deal, and then refinance when rates go down. They call it marry the house, date the rate. So I hope that was helpful and look forward to the next one.
Thank you, Jen. Whether you're thinking about buying your first home, your move-up home, or your downsize home, investing in real estate, or simply wondering what your home is worth in today's market, we're here to help. If you have questions about the market or would like to personalize a home value analysis, we'd love that opportunity to visit with you. Time to buy? Come see us. Let's do a buyer consult and get on that train for finding a great value in a house. I'm Missy Stagers, MStagersRealtyPartners Realty Partners. Thank you so much for watching, and we'll see you next month with another market update.